These markets are absolutely testing my patience. I don't want to use the word frustrated because that would imply that I expect the markets to move at my will, but it is taking every bit of any good habits or discipline that I've built over the last 13 years to come in here every day and wait. And I'm taking trades here and there and I'm making money, but I've not taken a full-size trade probably since early October, maybe even September. And that doesn't look to be changing anytime soon. This is just simply not the time to swing for the fences. And I've got ideas today and I might take them. Again, I am taking trades, but what's very important, what's kept me from getting chopped up, actually my win rate is decent for what I've taken this year. More winners than losers is the world we want to live in, but I'm controlling position count and sizing, and you must do the same if you're going to survive the chop, this churn that we're in. Listen, don't force it in this environment. There's simply no direction, no follow through, and I would argue no edge, especially if you're a trend trader. There's just no edge right now. So just realize this is not a do more market. And you know this, it's obvious in the charts. We'll get into breadth here in just a second, but I encourage you to, if you've ever, said, I'm going to wait for the best timing or only A+ setups, any of these things that we tell ourselves that we can do or we're going to do, this is one of those times where you're being tested. So do less, keep yourself accountable, and control yourself until we get clarity. All right, remember that thing I say all the time is that when you get to a place where you have true edge in these markets and you can depend on what you're doing here, you can make your money make money. The markets are an opportunity, okay? The opportunity for my edge, for trend continuation, is not there right now. So the markets aren't the risk. The markets are very clearly showing me that they don't have direction, follow through, any of it right now. It's just chop and churn. So that means I am the risk. That means that if I force it, if I overposition and overtrade, that is not the markets being manipulated and shaking me out. That is me forcing it, okay? So I won't do that. I have things in place. I have levels that matter. I look for confirmations, right? So I may put on trades here and there. There's a scenario where I could do something today that we'll go ahead and talk about right now, but just understand you are the risk and you've got to control yourself. So looking at the SPY here, we have another day where we just look like we're going to break down through the 50 and then get bought back up in the afternoon session. Let's look at the weekly candle, maybe a little more telling. This 675 is still my number. As long as we can hold that weekly uptrend, I'm not overly bearish on the market. But the fact that we just cannot get any momentum, the high beta stuff is rolling right now. We've got very selective, even defensive rotation happening out there if we take a look at our sectors. Guys, the weekend Saturday session, we're going to go deep. We're going to find the strength this week in the sectors one by one. I think this week's candle right here, I think this is going to be a very telling candle. If we close lower end of this weekly's range, we're going to need to open ourselves up to the scenario that the market gets a little bit more bearish, okay? Hasn't happened yet, okay? I'm not going to jump the gun, but I think this week's candle is going to be quite telling. There's some positive stuff out there, right? If we jump over here to the RSP, look at this. This is fantastic. A fantastic look in the equally weighted, right? So I'm not overly bearish, okay? Don't get it twisted. The market's fine. It's just what is, that word I don't really want to use, frustrating, is the fact that we just, every time we pop up, think back just to Monday, right? The strength that we saw on Monday, good strong close, completely wiped the move the next day, right? And then continued lower yesterday, but yet still got bought up in the afternoon session and closed above the 50, right? It's just, man, this market can't get any follow through. And I would say either direction, right? It's not like we're clearly breaking down. It rolls over and gets bought up. Look, we're just going to have to chill out. We're going to have to chill out. I'll consider a position or two today. I have a few ideas that I do want to maybe go a little bit deeper as opposed to just saying this is a triple R. There's a couple that maybe I'll explain a little bit deeper, my thoughts behind them. But do know that when I do stuff like that, like when I have an idea or a bigger picture thing, I still respect structure, okay? I have levels and structure, the ground rules that I risk off of. So just because I have an idea or I like this thesis that I've come up with in my head for the trade of why it could work, structure is a stop, okay? I'm not trying to outsmart anything, but the scenario for me getting involved to the long side today, let's change this back to yellow, would be a remount of the 9. We're getting a retracement reaction at around the level, a remount of the 9. It's a bit of a sloppy one, but it would be a triple R on the SPY. So that's what I'm looking for. Okay, if we continue lower, I am not going to go short in the markets. I do have some shorts on my radar that I'm interested in taking, but when I say like short the market, which, you know, my bearish scenario means that I could short the market in a scenario like that when we begin to lose a weekly low, come back, retest, and fail it, I could short the market. Get a move that gets me, you know, I'm taking profits into a move like that. We pop back up. If we fail this weekly low, I short the market, right? In that scenario, I mean SPY puts, or maybe some other indexes or sectors puts. But there's some individual names that are just downright nasty looking right now that are triggering shorts to where if the SPY begins to make that first move lower, we can take clean triggers on turds that have been in solidified downtrends for months and years that are triggering to the downside. Some of that is on my radar. But when you hear me say short the market, I'm talking about SPY puts or other indices or sectors, okay? We are not there yet, not even close. Things have to happen. We have to lose that weekly low, come back, retest, and fail, then I short the market, all right? But, you know, as I said, none of that is happening, so I've still got to favor bullish price action. Back over the 9 might get me into one of these ideas today. Let's look at a couple other breadth signals that I actually haven't looked at yet today. So this is us doing it at the same time. You know, look at this. Look at this. Stocks above their 15-200-day moving average. We're pushing back up on that. And the high-low stocks making new highs versus new low. Another uptick on that. So breadth is okay. I did look at internals. We'll check that out here, guys. If you want these charts, just ask. I can drop the link in your comment. You know, we've got some inflow. All right. We've got some inflow. Same thing here on the advanced decline. You know, it feels annoying out there. And there was some selling in the high beta stuff, momentum names yesterday that felt a little worrisome, but we don't have a short signal yet, guys. All right, I'll leave it there. Let's get into these names. We got AMR. So I want to focus on where some of the strength is. I think the Saturday session is where we'll really go deep on what that is. Again, I want to see the weekly close, okay? Do we need to start changing our, I don't want to say bias, but do we need to start better building the scenario of downside price action in the markets? Or do we need to just focus on the rotation, right? Like where the strength is. One of them is resources. One of them is materials. Retail is still strong. Healthcare looks all right. You know, the tech stuff is, even like the beats and stuff, they're gapping up and selling. This earnings season is interesting. A lot of triple beats that are getting sold into, okay? So that doesn't suggest Wall Street is overly aggressive at these levels. You know, it might feel like the market is overpriced and we're due for a correction. Really quick, before we go into the names, a correction for me, guys, I would almost love to see it because it's kind of what I said, right? Like with the markets testing my patience and the fact that we're just churning up and down, and we're not in a clear follow-through trend, I'd love to see the market just correct, okay? That scenario where we just start to lose level, confirm below, and get into a downtrend, pulling back down into prior all-time high levels about 10, 11% away would be a healthy correction that would probably reset the markets for us, right? We'd probably get a trend down to it that would be tradable, okay? And then if we react off of it and show reversal signals, you know, maybe we start trending back up towards highs and just start the next bull market. We'll see. That's pure speculation, right? I'm not calling it, but those are scenarios that are on my radar. Let's get back into the list, guys. All right, AMR is in the coal sector. Retracement reaction at around our level. Remount of the 9 is on the radar here for AMR. SYM. I want to be looking at this because it did just report earnings after the bell. 59 is the open. All right, so we've got some work to do there to get back above the prior all-time high level, okay, the box breakout level, and the 50. But if we run back, I think this looked pretty attractive on the weekly. Yeah, so weekly triple R trigger here on watch coming off of a positive reaction to earnings. Let's see if it can hold up though. Some of these things they're getting good numbers and even a good reaction are selling off, next day's open. So we'll see, but this is on the radar. And I've really only got one more without getting into more like sector ideas and like if this and that. Something certainly needs to happen. Well, maybe that's always the case, but you'll see here in just a minute what I mean by that. But an idea that I've got here is for Zoom. I talked about this for a while now. Let this thing break out of the box, first triple R after. What are we getting? I mean, how many times do I got to show you guys to like, don't chase the breakout? okay? Especially we were vertical into this one, and they rolled it right back in, holding structure, reacting off of our 50, re-triggering back through the box breakout level over the 9. Shake and go with triple R trigger, box breakout, 3 models triggering right here. The one concern of mine is that this is software, right? You know, it's loosely, so packaged software. Software sector has been getting crushed, okay? But IGV had a capitulation signal yesterday, okay? Very oversold. HVE here on highest volume ever on a hammer candle. I mean, if there's a time for a bounce, this could be it, okay? So if software bounces and then we look back over for, like, look at stuff like CRM, right? The biggest companies, software companies in the world, just getting crushed, but look at Zoom. So this has been showing relative strength. So if we're gonna catch a bounce in the software sector, if, and we go back to how we have these 3 different models stacking up and triggering here on Zoom, I like this trade actually quite a bit. I'm not going to marry it, okay? I'm still going to get out before earnings. I will probably get the late February contracts, you know, but this is on the radar today. All right, I still want all the things. I still want to see some, market internals speaking to me. I'd like to see broad strength and positioning. But this is pretty high up on my list today. We'll see. We'll see. You know, I've had some things that have been high up on my list that just because of the things that I look for, because I build if, this, and that scenarios, and I don't just jump emotionally into things, like one being APLD. I almost got into APLD Tuesday as we were doing a shake and go with triple R trigger, trying to trigger there, but the rest of the market was selling off. At about 11 o'clock a.m. in the New York session, I was looking at buying this. I'll pull it up. All right, I was talking in chat. I was letting people know, like, it was right around here. I was like, guys, I'm looking at this thing through high day. Sort of talking through my ideas there. And then I realized the SPY, RSP, IWM, and internals were all selling. So I was like, okay, actually, never mind, guys. I'm not as clean as this looks. And look, it did trigger. So it almost got me in based off of the chart and my models. But because I have other scenarios, I have other factors that I require to enter a trade. I want the full momentum and strength of the market behind my positioning. If I'm going long, I want the whole fucking market getting bought up, okay? It's that simple, right? Like, I'm not overly complicated here, but I have rules. I have demands that must be met for me to put my risk into the marketplace. And I wasn't getting it, so I walked away. And, then it was on watch again yesterday, but straight out of the gates, we rolled. We never triggered through the level, and we rolled. So, I have rules that kept me out of this. I'm not buying APLD because I think they're going to be some company, and they're like, I don't give a shit about this company. Okay, I'm a swing trader trading technical analysis. You shouldn't be trading fundamentals, swing trading 3 days to 3 months. Yes, I look for a strong company in a trend backed by growing fundamentals, but I'm not analyzing these companies and buying into their story or business model. Okay, I'm trading technical price action, trigger structure, rule-based if this then that trades. Okay, models. If my rules aren't met, I don't enter the trade. Okay, or if I do and I take a loser, that's where one of those times when I have to reflect to the 3 M's. Was it the model? No, it's never my models. All of my models have statistical edge and outperform the market. Okay, they hit, every one of them hit it over 50% with a minimum of 2R aligned with proper timing in the market. Done deal, backed by data. Not the model. Was it me? Those are the times where I have to reflect and be real. Yes, it was me, okay? Had I taken APLD, I would have gotten stopped out. I would have lost money on that. I almost took the trade, but then I ran through my checklist of things to see if I had the momentum of the market. And I didn't. And I didn't take the trade, and I didn't lose money. I didn't get chopped up. I have an edge. I would have followed it. The third M, if you haven't heard this before, is it the market? Proper timing. Guys, I have a few other names here that I want to talk about, so we'll wrap it up there, but this is just an example of my rules, my market breadth, and my if this then that way of trading being mechanical and as robotic as I possibly can, taking me and my thoughts, wants, and needs out of it and executing a system. This is what my edge is, okay? So this is just another reminder here for me on APLD. I almost got into this. I would have been stopped out the next day, and I would have looked back and realized that I bought something when the entire market was selling. I don't do that anymore, guys. All right, so we talked about a few of my ideas, AMR, SYM, ZM, on the radar if the market is hot today. Another thing I want to talk about here is healthcare. The last time, let's just do XLV. The market has been churning, right, since I would say late September, certainly early October, but if you look here in healthcare, as the market was really going sideways and even flipped into a daily downtrend there for a little while, healthcare broke out, okay, confirmed and moved higher. And it's been holding that trend. So I'm wondering if we do continue to see churn or even maybe weakness in the markets, do we see rotation, defensive positioning back into healthcare? It's on my radar, okay? Pretty big volume yesterday out of the sector. The sector is triple R'ing. Retracement, react. We never broke structure, reaction, remounting. The 50 and the 9, I would say through like 157 would be a good clean trigger for me here on healthcare. So I've got a few names for you. MRNA is one that has changed character on volume, right? Change of character. First triple R worked. You know, this one was a little bit too tight, but that was a good clean triple R. Looking at the next one possibly here, back over the 9, retracement, reaction, remount of the 9 would be trigger. Looking at 4470, something like that. It's on the 44, that's me. Get your cold cuts. All right, yeah, over the 9, guys, on MRNA is on the radar. And then Lilly, I just want to talk about this because this looks to be breaking out off of an earnings report, which is fine. Great. You can trade the breakout if you want. You know, but look at what happened to these people that traded this breakout. Just let it break out, let it go. I don't care if it takes all the way until up here to triple R. That's higher probability. How many times do I have to show you shake and goes? Okay, just let it break out of the box in the first triple R, however that looks, as long as it holds most recent swing lows coming off of an earnings report, a positive reaction to one. The next triple R on this is higher probability than buying the breakout. All right, just going to say that. Then we got CAH, another one here, I swear to God, I didn't mean for that to happen. I swear to God, I didn't mean for that to happen. But like, I show you every single day. Let's buy the breakout. Nope, rolled it right back into structure. So what I'm looking at is a shake possibly here. Breakout, fake out, shake out, pulls it into the structure. If we react off of the 50 and get back over the 9, that's a higher probability setup, okay? Oh, we're on earnings. Did this report? No, it reports today. Okay, so same idea. If we can trigger off of earnings, right? So same idea, breakout, fake out, shake out. If we get a trigger clearing through this, you know, sideways consolidate, yeah, that's actually quite attractive. Yeah, let's see. Let's see, do we get, I mean, if it gaps up, then it just becomes a peg play on watch, right? But let's see. If we can get a good controlled move back through the 9 off of earnings, then that's attractive. We'll see. I'll look at that. I'll at least see what the reaction to earnings is. But you know, maybe we just get gapped on and we just have to wait for a new setup, the peg play, which we'll talk about here in just a second on a couple of these. AMGN. I'm not trying to do this. I'm not trying to, like, I don't fucking look at this name. But look, breakout, fake out, shake out, next triple R. Boom, money printer. Yes, it was off of earnings. You wouldn't have taken it, but like, this is the price action that repeats. Anyways, the reason this is on this list is coming off of earnings, ripper, coming out of a massive box breakout. The next triple R on this is high probability. HCA. Okay, let's roll over into the peg plays. Guys, if you don't know how I do a peg play, I look for a gap up on earnings. I want it on at least 200% volume, so 2x average volume. And I put in a anchored VWAP, okay? And then I put in a fixed range volume profile starting on the gap day, moving it over, and it has a point of control that is this black dotted line. To explain that as fast as possible, above the dotted line, buyers are in control, below, sellers are in control. Anchored VWAP, I want that curled up, and I want price above the point of control, and above an upsloping anchored VWAP is, in 30 seconds, my trigger for my peg play model. So that's on the radar for HCA. SMH, I want to talk about this, okay? Did we catch a bid off of the prior all-time high? If it does, I think the market might make a nice move here today. But if we lose a 50 in semiconductors, then bye-bye market for now. I'll go ahead and say that. That's the deal here, guys. Pretty good volume coming off of that prior all-time high retest. Okay, can we get back over the 9? Can we triple R in semiconductors? Might want to look at some semiconductor names if we do that. I think, what was one? I don't have it on my list today. They're a recent reporter, TSM. Yeah, keep this on watch, okay? Triple R and TSM along with the triple R and SMH would be attractive. And I want to look at space, okay? Certainly one of those sectors that got hit yesterday, but we've not broken anything here. All right, big volume. Let's see. I don't care about the color of this volume. I care about what comes from it, right? Which means this is a retracement. Do we get a reaction and a remount? And then that would tell me that highest volume ever here meant that it got bought up, and you could probably trust the resumption of trend. All right, that's much deeper idea there that I explain more in Bootcamp. But if we get a triple R in space, ARKX, we're gonna want to be open to taking a couple of these names. RKLB being one of them. Simply retracing to the 50, reacting off of it. Do we get a remount? Okay, so through 81.20, it's a good look for Rocket Lab. If it happened, it didn't break swing low, reacted off the 50, it's a triple R. Retracement, reaction, remount. I'm not going to over explain it. PL, same idea, okay? I mean, pullbacks are healthy. I've been saying for weeks, wait for the pullback in space, okay? Wait, it will come, and see if it triple R's, because that would mean that they stepped in and bought the dip, and resumption of trend can be trusted, okay? At least you have risk to set off of, whereas if you were buying all the way up here, where's your fucking risk? Just some random candle, okay? If we turn around here, at least you have a swing low that you can risk off of. All right, makes sense? HWM, another decent looking one. But guys, honestly, a lot on this watch list. If you want it, I'll copy a link and drop it in your comment. Just ask. One thing I want to say real quick. Could you guys do me a favor? Hit the like button. These videos take hours to get uploaded, and hitting the like button takes 1 second. I would love if you could support me in that way and just hit that like button. Show YouTube that you guys are enjoying what I'm doing here. You're showing me. I believe you. I appreciate you. Okay. I know I'm seeing more views. I'm seeing longer watch times. Thank you guys. But if you can show YouTube by just hit that like button real quick. All right, let's move on. Emerging markets. We've been talking about these forever. You guys trust me. You want this watch list? Ask for it. I'll drop it in your comment. Same deal. Same thing I said about space. Like, we needed a retracement in this sector. Let it dip. Look at this. This is the breakout. This is the emerging markets box breakout level that's happening right now. So we're breaking out and they're shaking it. It's a higher time frame shake and go is what's setting up right here. It's beautiful. It's beautiful. Don't buy the breakout, okay? You got 1 or 2 days to like that, and then you're in drawdown, right? If you were buying the breakout. I don't buy the breakout. Wait for the next triple R, okay? This could pull back a little bit more, but the next triple R next time through the zone, we're going to want to be looking at emerging market. BVN is one that's on my radar. This comes off of the emerging market list. I've got a bunch of ADRs here that are attractive. Brazil, Peruvian stocks, Colombian, Chile, Spain, Greece, different stuff, guys. All right. Anyways, retracement, reaction. I would say through yesterday's high is a good look for me there. EC, another one. Okay. Look at that. Tried to break out, shook everyone out. I mean, look at that. You got a range here, obvious, clear range that we ripped up vertical into it. Pop it above and then rip it down. Now it gets bought up back over the 9. It's attractive for the real move through the range, which is why I stopped buying breakouts, because I saw that the pullback, after they break it out and roll, if the pullback holds structure and then it re-triggers back through the zone, that's the move that typically does go. And I can't tell you how many times I saw that happen after being stopped out when I used to be a breakout trader. Last one, SQM here. All right, just pulling back into the 50 zone. So let's see. Let's see if we can get a reaction and a remount. And another bright spot in the market is retail. I swear to God, I'm not playing in it. I'm not playing in it. But what else do you want, guys? What else do you want me to show you? I can't see, so I got to have these. All right. Breakout, fake out, shake out, pulls it into structure, re-triggers. Retail looks hot, guys. And DLTR is one of my favorite names in the sector. Same thing. I got a retail list, guys, if you want it right here. Nope, that's the resources list. Retail right there. If you guys want that, hit me up. But back over the 50 here on Dollar Tree looks pretty good. AEO has a decent look. Yeti has changed character, holding structure. Triple R's are working on it. Maybe through yesterday's high on Yeti has a decent look to it. I like a couple of the others a little bit better. Gap looks good, but this is a big range, so let it break out first triple R. After it breaks out first triple R, whether that looks like a shake and go or a triple R above, we'll see. But as long as it holds this structure, when it breaks out, pulls back, next triple R after it breaks out of the zone is attractive. Guys, that's it. That's enough for today. Control yourself, okay? This is not a do more market, all right? Stay safe, manage your risks. Let's go make some money. I'll see you soon.